the social media handles ready
Yeah, I'll do that.
in a group chat, and then watch the door. And then when you start the recording, let me know, and then I'll start our presentation.
I started the recording, Carmelo. Go ahead. I'll share those social media handles in a couple of minutes here. Okay, let me just find them. But you can start.
Okay. Well, thank you everyone for joining us tonight. Tonight we're talking about the Bank Canada interest rate announcement that happened this morning. As part of the introduction, I'd like to introduce myself. My name is Carmelo Boutis. I'm a mortgage agent at yourmortgageyourway.ca. You can find me on Instagram. I don't post too often, but the best way to reach me is via email at carmelomortgage@gmail.com.
I just pinned those links to the top of the chat. There's also a link there. There's like this presentation is going to be, we want participation, but also if there's any questions that I kind of want to ask offline, there's a link there as well to book a call. My name is Alex Shanieski, Toronto Realtor with Remax Condos Plus, and there's a QR code on the screen if you want to connect with me on social media. All my links are there.
So today, the Bank of Canada, it's old news now, but they held the overnight rate at 2.75%. There was no change in the Bank of Canada rate, which means no change in the variable rate mortgages, and actually there's no change in fixed rate mortgages because the Bank of Canada does not impact fixed rate mortgages. But there were 5 key points when it comes to the conversation and the meeting that they had with the press afterwards. So I kind of wanted to summarize 5 key points. And for them, the Bank of Canada, they were really pointing out the things we've heard in the past, right? There's a lot of trade uncertainty. With the trade uncertainty, there's also slow economic growth, right? So we don't know come in 2 days from now, August 1st, are we going to have a trade deal with the U.S. or not? They clearly recognize that the economy is slowing down. However, there's they're looking more forward toward the future. Inflation, they recognize that it is stable, but there's underlying pressures. The underlying pressures are rising, meaning, well, if we don't get these trade deals with the U.S., and let's just say we get a blanket 25, 35, whatever these crazy numbers that the U.S. may oppose on us, that's clearly going to put pressure for prices going up and inflation.
Yeah. So this is a presentation for kind of people of all understanding. So for those that maybe are not familiar with what inflation means, can you kind of just explain this a little bit? Some of these terms.
Okay. So inflation is really just the price of goods that go up or down, right? So if prices of goods are going up, there's inflation. If prices of items that we're buying, it goes down, it's disinflation, right? So that's what inflation is. The Bank of Canada, the key point is they acknowledge that the employment market remains weak, meaning the job market. The people, a lot of people have been laid off in the past 12 months and unemployment has been rising. So the Bank of Canada recognizes that their goal and their target is more inflation. They want to keep inflation around that 2%, right? They recognize the unemployment market's weak, but surprisingly, it's holding better than they expect, especially considering what we've gone through in the last few months.
Yeah, and their job is not to put policies in place to counter tariffs or unemployment. It's just to keep inflation.
Yes.
At a certain percentage, right? And when you speak about unemployment, I don't know if you have an unemployment. Do you have an unemployment graph there?
Yeah. Well, I'll be sharing that shortly about that.
We'll talk about that too, because the one is Canada and the other one is Toronto.
Yeah, I have the Canada one, right? So the other thing they point out is scenarios of they also had to listen had to like turn off all my phones and everything to actually pay attention to the meeting. And they provided 3 different scenarios, right? One with high tariffs, one with no tariffs, and one where we are, right? So, and they realized the Canadian economy could move in either direction. If we have high tariffs and low, and companies aren't really, building new factories and we're losing jobs, they realize the economy will weaken, and they also recognize, well, there's a scenario where we get a good trade deal with the U.S. and we do still have free trade, and there's more certainty in the market where business could then go out, start investing, hiring people back, right? So they recognize the whole spectrum of opportunities that could or could not happen in both directions.
Right. Okay.
And then the last thing is, which is pretty important, is they do expect inflation expectations they expect it to stay around 2% because that is their goal. They want to see, inflation, the cost of all the things we buy, be around that 2% because that's their target. We've all seen what happened in 2021, 22, 23 when prices started going up, and I still feel personally these prices are still going up, right? So they want to keep inflation monitored, at a reasonable level, which is 2%, because if inflation goes back to that 4, 5, 6%, Alex, interest rates are going up, regardless of the economy.
Yep.
So those are the 5 key points I got from the Bank of Canada meeting. It was pretty interesting to listen to. Some things were a little bit over my head. Some things I understood most of the things that they're saying. Ultimately, Alex, do you think they did the right thing? I have mixed feelings about that.
I think that what they did is they kind of front loaded a lot of their rate cuts. That's my opinion, and I know we've had some conversations also about this. But I think that they're at a place where they got to this overnight rate a lot quicker than other banks, and ultimately we're all kind of feeling the same types of pains from things that happened during COVID and how that impacted our economies, and then also these trade negotiations with the U.S. as well. So I think they front loaded it. So I wasn't expecting them to reduce the rate. Would I have liked to see them reduce the rate? Yes, sure, but I think that what they did makes sense, and I think that the key thing is that they need to keep an open kind of mind to reducing the rate in the future, like being open to it. I think that's, as long as there's an indication that there are reductions potentially coming, I think the market is going to be positive.
So that is one thing they actually did say. If economic forces dictate and push them to move, they said they will, which was positive. But I agree with you. Like, they've lowered interest rates by 2.25%, and it's called in the past 18 months. So they did lower it a lot. Now we were at extreme highs, and if you asked me a month ago, Alex, I would have said, yeah, they should have. Listening to everything today and seeing the news that came out the last 30 days, I kind of agree with what they've done, considering this trade deadline with the U.S. is in 2 days from now. That could change everything. So it gives them a lot of time for the next meeting in September to then make a decision. So really, what's happening now? Like, when you look at interest rates, Alex, it's kind of tricky to kind of describe this chart, because it's a combination of the Bank of Canada rates, which is the blue line. That's where the interest rate you see on the chart is on the left-hand side. You can see how rates have come down the past year. And then the gray line is the 5-year Canadian bond yield. Now, the difference between the two, Alex, just to explain it, the reason why I focused, and today is going to be focused on the Bank of Canada, is they impact variable rate mortgages and variable rate loans, home equity lines of credits. So anytime the Bank of Canada has a change in their policy rate, it has a direct impact to those types of loans and mortgages. Those who are looking to borrow money, like say get a mortgage or a loan that's on a fixed rate. Now, the most commonly mortgage rate taken out is a 5-year fixed. So how that works is the banks actually borrow the money before they lend it to you. So they borrow it cheaper than the price that you receive it at. And that's kind of pegged, and that's kind of like telegraphed off the 5-year Canadian bond yield, which is in gray. You could see now, they don't line up exactly, but you could see over the past few months, that gray line, how the bond yields have been going up. And that means fixed rate mortgages have been going up, even though the Bank of Canada hasn't changed the rate in a few months now.
Yeah, because the bond yields have gone up. And so this is, I think, something where there's a lot of confusion, because I imagine that anytime that there's a Bank of Canada overnight rate meeting, you get people calling you, asking you if there's a change to their fixed rate mortgage.
For the past year and a half, when the rates were going down, Every approval I had, every person trying pre-approval I had, every mortgage coming up for renewal was calling me. Oh, the Bank Canada lowered the rate by a quarter. Does my rate go down by a quarter when they're getting a fixed rate mortgage?
Yeah.
It's. I understand why they think like that, but it's the But unfortunately, they're not. This kind of hopefully clearly shows that the two don't move at the same time.
Yeah, they're not too far apart from each other. It's like one is at 3.6, let's say, and the other at around, let's say, 2.9, 2.8. But oh no, sorry, 2.6. So they're about one point apart, actually.
Yeah, but again, you could see over the last few months, the fixed rates have been going up. Like, and the reason why it's kind of is maybe it's a high level, like you probably above me, but there's so many factors involved. But everybody's wondering where rates are going. The truth is we don't know. The short-term trend, meaning in the last 3 months, it's evident. At least in the very short term, it's going up. We need. I think the catalyst will be a trade deal with the U.S. Once we know that, I think a new trend will begin.
I think so. Yeah, I agree with you. It's like you need something that like an impact factor, right? That's going to shock the market in a different direction, right? Give it a bit of a jolt that there's an indication of something changing.
Exactly. So what's happening with our economy? Like, this is the inflation, Canada's inflation rate. Now, again, inflation, what it is just kind of like they take a basket of all goods, right? From petrol to food to TVs to sofas to houses to the cost of mortgages, the cost of renting, the cost of shoes, everything, right? So they put on a basket, and you can see in the past year, a year ago we were a lot higher than we are today, right? We were closer to that 3%, right? But the fact of the past 3 months, inflation has it gets kind of steep. Is like at April, that's when Trump came out with that Liberation Day. Right. And that's when we started getting, he started tariffing us back in, I think it was like February or March.
Yeah, you can see from in 2025, right? Like, look at that jump from December to February.
Yeah. So
basically, that's when all of this started, right?
So the question is, it takes time for all these things to impact prices, because with all the news I listen to, and some companies are taking a portion of that tariff cost and lowering their profits and only passing a portion to consumers. It really depends on what that product good is. And again, we have this, it's been a crazy whirlwind in the last 6 months, right? So, but the question is, if inflation that we were at 1.7, 1.7, 1.9, are we going higher? Because if we are going higher, there's a chance that, rates may not come down anymore. So that's why it's important to take a look at this.
Yeah.
The other important thing, which I find is more important, our economy, employment, jobs. Well, Alex, if people aren't working, this is clearly see how unemployment is going higher. Yes. If people aren't working, people don't have money to spend, regardless of the price of the item. There'll be less people trying to buy that same good, right? Regardless of what it is. Now, there are going to be some few staples that people have to buy, right? People need shelter, people need food, people need, gas for transportation, right? So if unemployment goes up, I'm more concerned about this than inflation, because if nobody's got a job, Alex, and nobody's buying houses and nobody's got money, I personally don't care if prices go up, because I don't have money to pay for it anyways.
Right.
Right. I'm going to be selective with what I buy.
Yeah, so in a year we jumped from 6.4 to about 6.9.
Actually, yeah. If I should, maybe next time, Alex, I couldn't get a 2-year chart.
Yeah, I'll get a 5-year chart or 10-year chart. The thing is, it'll be challenging because there was a big dip in unemployment when COVID started.
Yeah, that's the thing. Like, I did look at a 3-year chart, and there's too many moves, right? Because that whole 2022 to like that's when we reopened. I think it was like December or January 2022, 23, right? So. I'll try to find another form to get a little bit longer, but in 2 years ago, we had an unemployment closer to 5.5, and now we're at 7.
Right.
Like, people are, again, I feel, Alex, that this number may not be true, because I have heard more news reports with people laying off. I just heard this morning Canadian Tire's laying off some jobs at head office, right? Like, that may only be 50 people or 100 people, but that's still, those are good paying jobs.
Well, yeah. And I heard that in in the Greater Toronto area, this is the Canadian average. But in the GTA, this number is closer to 10,
Yes.
according to news sources.
I remember I looked it up in the Greater Toronto area, or it was the Greater Toronto area, Ontario. I think we're at 8.5 to 9%.
Mm-hmm.
So we're having a tougher time here in Ontario.
Yeah.
What's happening with our economy? Our economy is clearly not growing, right? This is what the Bank of Canada looks at. We've had an interesting first 6 months because before these tariffs, everyone around the world, especially the United States, was buying as much as they could from Canada to get it, imported to the United States before there were tariffs. So there's a lot of manufacturing, a lot of production. I wonder now that they're no longer going crazy buying our stuff, what's going to happen in the next 6 months?
Mm.
So I've listened to some economists today. I've heard a whole bunch of different numbers, but the consensus is let's call it the third quarter could be from June till September. It's no surprise if we're going to see the economy shrink by a little bit. It could be 0.01, it could be 1 full percent, which doesn't surprise me, but that's not a good thing. Like Canada, we need the economy to grow, right? We already know there's population decrease. So with the economy not growing, like in Canada, you can't really hold off or especially raise rates if your economy is not growing and people are unemployed. Right?
I don't think everybody's planning to raise rates though.
He didn't leave it off the table. Like my understanding, I've always understood my whole career, inflation dictates everything. Inflation goes up to 5%. The fiscal stimulus could help support the economy. Monetary policy is going to focus on the inflation, which is what it is. Like it's not a right thing for them to do. I would focus more on jobs and economic growth, especially when inflation is right now tamed. And I think with regards to this trade deal, that's the biggest thing. That's, I think, is going to be the catalyst to make us dictate where we go forward. Now, Alex, again, you shared something with regards to what's happening with the real estate market.
Yeah, I just wanted to share with the condo segment in Toronto, because this is the segment that's taken the biggest hit, this year, and also just like where prices are since the peak of the market in 2022, 2023. So this basically shows the annual change in average Toronto condo prices. That black line is the 10-year average, and we can see that normally there's the 10-year average is a 6.5% growth, but in the last 3 quarters, we've seen a decline. The biggest was Q1 of 2023, but even now in the first quarter of 2025, we're still at a decline. So there's basically just a decline in condo selling. There's a lot of inventory on the market. There's just like headlines all around it. So I feel like that's kind of putting fuel to the fire. And, most of the headlines talk about pre-construction, and they talk about, new condos where the buyers need to close on them and they're not appraising at the same rates, and how sales have dropped in that segment. But basically it's actually segment wide, but just some parts of the market have been hit harder than others.
Yeah, no, it's really important because condos are a lot of the entry points for people getting into the market.
Yeah, and it impacts the rest of the market, because if people can't sell their condo, they can't buy their freehold property.
Oh no, it has exactly, like, again, all those people who bought as their first home are trying to level up. They had a lot more equity a few years ago. With that equity being gone, now they don't have that equity to put for that larger down payment to buy that bigger place.
Yeah, and many people, they kind of sustain the lifestyle for themselves because of the equity in their homes, especially in the last 15, 20 years. Like somebody who bought a house in like 2005 or something, or even 2010, looks like a genius now. It's appreciated, probably doubled, or maybe even 2.5, or even tripled in value, right? But with many people took equity out to buy condos as an investment as well. Now they need to sell, they can. So it's some people are feeling a pinch here.
It is, yep. And all we need, Alex, is interest rates to come a little bit lower, to the point where at least the condos that are out for investment, they'll break even, or they'll be cash flow positive. We don't need a big change anymore. The prices have come down. We just need that rate to come down. I'm just going to arbitrarily say 0.5%. And then all these cash flows, the investors will see these condos be cash flow positive. It may be
Yeah.
only $20 per month, but it's positive.
Yeah, we talk about this in our Instagram lives. I also talk about it on my social. There is a link for to my Instagram in the chat, but I also use TikTok as well. But I talk about this, that I've seen condos selling at prices where the market rent for that condo, assuming that the buyer put 20 or 25% down like they're supposed to when they're buying an investment property, they will either cover themselves, and I'm talking about not just the mortgage, I'm talking mortgage, maintenance fees, property tax, even landlord insurance. So the rents will cover all of that. In some cases, they will even be cash flow positive. In some cases, the person may be like out $50 a month or something like that. But I'm seeing more and more of this. And when the math makes sense, that's when investors are going to start coming back into the market, because for the longest time, buying a condo in Toronto was an appreciation game. They didn't cash flow. People were just buying them because they were appreciating, and that's what they were going in on. And then what happened is that prices grew rapidly, and then when people started to do short-term rentals in condos, prices grew even more, because now they can buy that condo for an even higher price because they're renting it out on Airbnb and they're making $6,000, $7,000, $8,000 a month. But now when the city of Toronto put in laws around short-term rentals, now you can't do that model, but the prices have already inflated to a certain point. Plus, you had lower interest rates during COVID. All of this kind of happened at the same time. It's a lot of information here, but ultimately, buyers don't buy the purchase price; they buy the carrying costs. That's kind of what I'm getting at. And if you can rent out your property on Airbnb, your carrying costs can be a lot higher. But then when the government takes away that ability for you to do that, but the prices have already inflated to that point.
Alex, you do a good job on Instagram how you show the actual examples of condos that sold for investment properties. It could have been investment property in the cash flow, right? So, a little off topic, we'll move forward.
Yeah,
now,
we can talk about this forever.
Yeah, I know. Well, what to expect moving forward? Because this is the biggest thing. I had a bunch of calls today, like, "Hey, Carmelo, what's going to happen?" Well, we have a trade deal. I actually specifically told one person, like, if you tell me exactly what's going to happen on Friday with this trade deal and what it is, then I could tell you exactly what will happen afterwards, right? Like,
I'm calling Taco.
If I knew this, I would sell everything, leverage everything, put it all on that one investment, and then I could buy in Hawaiian Island.
You think they're taking bets in Vegas on who the U.S. will reach trade deals with?
I have no idea.
Anything.
The point is, again, like, what's going to happen next? We'll find out something in 2 days. I have a feeling it may be prolonged. I think within the next few months, regardless of what happens on Friday, there'll be more clarity, right?
Looking forward to clarity.
Yeah. Now, again, I also found it's hard to find this. Like, what do the banks think when it comes to what's going to happen?
This looks a lot different than the past charts.
Yeah. So
banks, like from the previous presentations we did about this, they seem to be a lot more optimistic.
Yeah. Well, this is weird because, like, again, all of them thought there would be a hole today, and they were right.
Yeah.
But when I look at this, there's RBC and Scotiabank. RBC and Scotiabank think there's gonna be no more change in till the end of the year. However, TD, CIBC, and BMO think there'll be a 0.5% rate cut.
Yeah.
Who's right? Who's wrong?
Nobody. We don't know. But I like the ones with the rate cut. I'll vote for those. But it's just funny how I remember, like, I swear, when we were doing this, like, the presentation, like February or whenever the first couple were, and they were showing these expected rates. Like, I remember seeing some that started with a 1. Okay.
Yes. So it's interesting, like, because it goes to show that the truth is, even these people are experts. This is their full-time job, all to look at data, to analyze things, and a lot of them get paid a lot of money, right? So if the experts don't know what's happening, I wouldn't trust a lot of people on social media. The truth is, nobody knows, right? Because there's going to be events between now and the end of the year that nobody saw coming, right? So the expectation is, I personally believe that there is more pressure for rates to come down, meaning the Bank of Canada and variable rate mortgages, than go up. However, I also believe when it comes to fixed rate mortgages, there is more pressure now for fixed rates, at least in the very short term, meaning the next 2-3 weeks, could go up a little bit more. But by the end of the year, it'll be, we're in a range, Alex. Like you're not going to see rates, under 3% anymore, right? Right now we're over 4. Will we get under 4? We go back to 3.99, 3.89. Absolutely, that could happen in the next 6 months. Is it possible that it's going to be 4.9? That is possible too, right? But again, if people's expectations are for rates going down under 3.5 or under 3, I think a lot of those days are well behind us. I think we would have bigger problems, Alex, if I saw a fixed rate at 2.99. There would be bigger problems with the economy.
Understood.
Now, the key thing is long term.
Yeah. So yeah, this is basically just average prices on TREB. So this is condos, this is freehold. There's even listings on TREB that are not in Toronto, like some agents list properties in Windsor on TREB. But this just kind of shows you an average. So you can see that for the last, let's call it 3-4 years, we've been going pretty sideways. 2-3 years. We're basically going sideways. The red is the 12-month moving average. The blue is the MLS average price. But when what you need to do when you're looking at real estate values is look at it not as, what happens in 2 or 3 years, but what happens in 5 or 10 years. And when you look back at it, like when you compare, for example, the price in 2022 versus the price in 2012, you can see that price is almost double. Now that was, something a little bit exceptional. That's not the norm that the real estate prices double in 10 years. And we are kind of making up for some of that rapid growth right now. Especially what happened during the pandemic when it was free money. Like I think I mentioned a few slides ago, it's all about the carrying costs. And when the interest rate is like 1, the carrying costs get very, very low for expensive properties. But then when people go to renew their mortgage, they get a rude awakening because they're not ready for that. But anyways, it's as far as real estate prices themselves, like it's a buy and hold strategy is the one that works best. And you can see that when you look at any 10-year period on this chart, you have always come out on top. Even if you bought at the top of 2022, I'm pretty sure nobody can predict, but I'm pretty sure in 2032, 2022 prices are going to look pretty good.
I have no doubt of that, Alex, because I remember back in that 2017, 2018, this peak here, I had a lot of customers purchase, and 2 years later, a lot of them are calling me and it's like, my prices are down, what's going to happen? It's like, I told all of them, give it 10 years. Like I always say, 10 years is, you buy real estate, especially when you're living in it, right? You're not going to be flipping houses, right? Investments are a little different, but even you should be buying investment properties with a 10-year time horizon, because when all their mortgages came up for renewal in 2022, all of them were happy.
Yep.
Right. So the prices came up, they were able to refinance. And again, 5 years is not like these spikes in 5 years is not with the expectation, but 10-year time horizons for real estate is, I find a comfortable outlook.
Yeah.
So I stopped sharing my screen, and I'm not sure if there's questions in the group chat, but
I'm going to stop the recording.
I'm
going to stop the recording. And yeah, if anybody has any